Sir. I'm Ong. I'm from WOU, but I represent myself. I have sort of studied a few things about GST, and I'm greatly concerned about quite a number of administrative aspects of the GST. For example, there are claim aspects that, you know, the refund, you need to seek the refund in writing within a year. There are also concerns about voluntary registrations of the under GST. There are also, for example, if you earn less than 500K, there's supposed to be no GST. But the thing is, if they get input tax, they may just, these traders may just increase their prices even without, you know, GST on it. You will just pass it on to the end customers like you and me. So the impact on inflation will be, I think it will be really higher than what you stated there. There are also concerns over the powers of the DG and its officers. For example, there are sections that empower the customs officers with the power to enter a building to search without a search warrant. Any officers of GST may arrest without a warrant. So I think such provisions need to be relooked into for some check and balance on those things. There are also a long list of non-appealable matters under the fourth schedule of the regarding the GST Tax Appeal Tribunal. I think the list is too long, and there needs to be a check and balance against the powers of the DG of GST. The next thing that I want to say is that while I understand the need to reduce the deficit of the budget deficit, I think there are other ways to achieve that purpose, the same purpose. For example, when I look at business reports of big corporations earning profits more than 1 billion, you know, even after paying taxes, their profits are still so huge. And I'm just questioning, who does this billions of dollars and ringgit benefit, you know? They're just sitting in the profit and loss and balance sheet, you know, benefiting very little people, only the major shareholders. And yeah, if the government can just devise a scheme to tax even just 1% of those earning more than a certain X amount of, let's say, 1 billion of money, you know, especially on those big conglomerates, yeah. You know, you can just earn a few, you know, you can just recover the deficit. I mean, this is something I think of, you know, I like to put forward as a suggestion. Because corporations just, you know, rather than taxing on individual sentient beings like us, you know, like rakyat, like us, these corporations should just contribute and regard it as a corporate social responsibility. So thank you so much.
Thank you. You want to answer the question? No. Oh, lady first. No. Very traditional.
Which, well, okay. So a lot of the first part of your question raises is in terms of the administration of the system. And unfortunately, it is as unclear as muddy waters. Passing on costs to consumers, yes, that's very likely. And that's why I emphasize that it's the 3.86% is additional, but it doesn't take into account secondary effects. It's the secondary effects that is going to come in when people start passing on. You charge me more, I'm going to charge her more. She will charge him more, and it just goes around the circle. So that's what I mean by secondary effect. And so that's why I'm saying, I also say that after the implementation of GST, we expect there will be a sustained period of high inflation. So it's not going to go like this and come back down. It's going to go like this, and then maybe over time, then it comes back down. And you mentioned about in terms of the power of the DG customs officer, of course, there's a need for check and balances, whether it's open to abuse. Like any other system, it is open to abuse. So it all depends on whether there's another check on it. And the check that we've heard, some of it being proposed, can be quite, let's put it that way, as fanciful. Okay, to reduce corruption, one of the measures being proposed is to snoop around people's emails and telephone calls. That's proposed by Paulo. I didn't put it. That's proposed by Paulo. He says that.
How low can you get?
Anyway, so there's ways. Perhaps then we start checking on people's email to see whether there is corruption in the administration of GST. Non-applicable items, that's possible, and I think apart from the power of the DG and the customs officer, I think it also the bill also vested a lot of power in the minister as well to exempt certain items, which was not clear. But I guess that would probably come out when the government really wants to do it. And in terms of taxing corporations, the thing is that corporations are even more fleeting than individuals. If you don't want to operate in Malaysia, you can easily operate from Singapore, from Hong Kong. And if you take into account the amount of tax that corporations have to pay, whether it's because of the NEP, the 30%, or slightly reduced from there, the tax that corporations will have to pay, then this additional tax would just continue to shoo away corporations from Malaysia. So setting a threshold that you have to start paying an additional 1% more would not be very feasible in a way, because as you see in many items that you buy in the departmental store, it is not selling for 100 ringgit. It's selling for 99.99 ringgit. So if you set as 1 billion ringgit, the corporation will never make 1 billion ringgit. It's going to make 9.99999 billion ringgit. So that if you set a very clear thing, then of course that it increases the chance of some sort of arbitrage type of possibilities between the two, and then you just make it slightly lower, and then you get the benefit of that. So I think, Hey Chi, you want to add more?
So I'll just respond to the second question about having a higher tax rate for the corporations. I think, as Kim-Hwa highlighted, the corporations can run to other countries. And if you compare Malaysia's taxes with countries like Singapore and Hong Kong, the taxes are already higher. So if you charge a higher corporate tax rate, like I think it's 27 or 28 or so. So if you charge like 1 to 2% higher, there's so many other places to run to. So we wouldn't be able to collect the taxes from the corporations in the end. And whether or not the corporations, if you say that they earn around 1 billion, the profits are just sitting there, yes, they answer to whoever gives them their job. So the shareholders are the one that manages them. So if they don't manage the profits well, so yeah, my point is that if corporate social responsibility makes the shareholders happy, so they'll do that. But yeah, clearly it may not be that way.
Please, and then you. Yeah.
My name is Lim Sun Fok. I run my own construction management and project management practice. At the moment, we are collecting service tax for the government, 6%. So when GST is implemented, do we have to collect over and above the 6% GST again, which is 13%?
So why don't you ask your question too?
I would like to suggest that now is not the appropriate time to introduce GST in Malaysia. The government always says we are one of the few countries that has not introduced GST. But we do not have a social safety net like many of the developed countries. As it is, the government is moving in the opposite direction. We, the members of the public, are subsidizing independent power plants. We are subsidizing industries that are protected, like Proton. Many of the manufacturers of consumer goods, they have been enjoying tariff protection for quite a long time. Now, the government must look at various ways and means of how to reduce the cost of living to the ordinary people before introducing GST. We can just mention a few examples. A lot of people have complained that Petronas is a major source of revenue to the government. But so far, Petronas has not published its accounts. Apparently, only the Prime Minister can see the accounts of Petronas. Now, similarly, I went for a talk a number of years ago by Aliran, where Dr. Michael Jayakumar said that 80% of hospital admissions are into public hospitals, but 80% of specialists are in private hospitals. And this is made worse by promotion of medical tourism. We train doctors and get them to treat Indonesian patients. Now, the suggestion that he made was that we limit the income of doctors in private practice, but I think that is not feasible. What I would like to suggest, contrary to what the gentleman said just now, instead of looking at corporations, there are many individuals who are making huge incomes. If you take doctors, for example, in private hospitals, many of them are making more than $500,000 a year. So to be fair across the board, the government should consider an excess profits tax for anybody who is making more than $360,000 a year taxable income. We give them $1,000 for every day. If they make more than $360,000 taxable income, then tax them excess profits tax, 45%. There was previously an excess profits tax, but it has been taken away. And you see, the government always says, when GST is introduced, we will actually reduce income tax. Income tax should only be reduced for those people in the lower brackets, because we are actually paying quite high taxes compared to other countries. But for those in the super rich group, the CEOs of GLCs, big banks, institutions, many of them are paid 10 million. For example, if you take Genting, Lim Gotong's son, I think took home about 68 million in remuneration last year. So these are some of the things the government can look at. Thank you.
Okay, the first one is whether GST will be in addition to sales and services tax. I cannot answer it for sure because it's up to the government to really do it. But there are signs, the hints, let's put it that way, the hints that the government wants to substitute it. Whether it's actually the case, I don't know. So unfortunately, that's as much as I can say. The issue of not having goods and services tax because it's not the right time, I think as an economics, any form of taxation is never good. So as a start, any form of taxation is not good. So is this the right time to introduce tax, GST? I think the government's hands are pretty tied, given the 7 reasons that I've highlighted, what they have said externally to financial markets, what is the issue in the US, which is increasing interest rates and sucking away the capital, and the dire need of the fiscal condition of Malaysia. I think the government's hands are pretty tight. Whether they want to do it, they like to do it or not, they probably have to do it. And it is important because if you think of it in a slightly different way, if they don't do it, then what I can tell you for sure is Malaysia's credit rating will be cut. There have been so many hints, so many warnings being issued by the credit rating agencies that if you don't reform, we will cut your rating. If you cut the rating, foreigners will leave with the capital, and your ringgit will depreciate. And you will end up importing inflation. By importing inflation, the cost of living will increase, the standard of living in Malaysia would also decrease. And if you imagine yourself going to Singapore, going to Japan, going to the UK to spend your ringgit, you will find how miserable you are, because your ringgit cannot really buy anything outside Malaysia. The purchasing power of ringgit is so poor. So Petronas, well, it's an issue that perhaps the MPs will have to raise in the parliament with the government, something that's beyond what I can say. You want to add more?
Well, we are approaching 4 o'clock. Are there other questions? Yes, sir. How about going up there, sir? Please mention your name and your affiliation.
Okay, hi. I don't actually have a question. I'm Calvin.
Your name, sir, and your affiliation.
I'm Calvin.
Hi, Kevin.
Hi, Professor. I'm an accountant. I actually had the privilege of, well, not privilege, I paid to attend the GST course by customs. So I think I should clarify a few things. I think they are trying to do their best. First thing is, obviously you all know it's a consumption-based tax, right? With the introduction of GST, the sales and service tax will be abolished. There is a talk that they will, not customs, but the income and corporate tax will reduce. That's what they're trying to work towards. What else? The IT system for customs department is outsourced. It is outsourced. There's a story behind it, but I will not go into that detail. They are supposed to be ready by August this year, I think. Now, when they announce the implementation of GST, it will be given a year to a year and a half for companies to get ready. The proposed rate by customs initially was 4%. They're expecting it to be 5%. To be confirmed. Maybe 7% they said, so that when they tell you it's 5% or 4%, then you shucks and duri, you know. What else? Are they ready? Customs have been actually going on road shows. If you really need to contact the customs, I can put you in touch with them, because we deal with the heads. All of us had to actually go through and sit for exams, okay, passes. What else? Oh, yes. They realized that there's actually one senior person in charge of transition, and they realized that there will be a lot of problems. They have been, as our speakers have put it, they've actually been studying this customs thing as far back as 2005. And they also said that with the implementation of the GST, companies will not actually be penalized that heavily if you don't commit fraud. If you commit fraud, obviously they'll come down very heavy on you. But even though you say heavy, the current penalty for sales and service tax, if you compare to GST, GST, the penalty will be half.
Okay. Could you hurry up a little bit?
Yep, okay. No, that's all. I just wanted to clarify a few things. If you need to get the customs to talk, then I can put you in touch.
Give us your email. We'll call you. Thank you.
Ken, thank you.
Thank you, Kevin. Okay, I'd like to, any final comments, Dr. Lim?
Thanks very much.
Pechi? I'd like to, we have heard so far a number of calls for taxes to be raised, like excess profit tax, corporate responsibility tax, and it's like we should soak the rich. I am of the opinion that taxes are what that makes for us, what we pay for a civilized society. But on the other hand, as an economist, I'm very conscious of the fact that we have to be careful in doing it for a very simple reason. Think of a situation initially when the government revenue equals government expenditure. Think of one day when they were all equal. That was a balanced budget. Now, if expenditure were to go up by 7% every year, and revenue goes up 7% every year, everything will continue to be fine. But if expenditure by the government continues to go at 7%, but government revenue drops to 4%, then we are in trouble. So what can we do? Since the government supplies subsidies to education, to hospital, and so forth, one tempting thing is to raise tax rates. But let us ask ourselves, why has the rates of increase of state revenue been going down? Because if you look at the rates of increase of government expenditure, it has been going on the way it has been going. But the rates of increase of revenue has fallen tremendously since around 2000. Why? Because the economy has slowed down. Because the economy has slowed down, we have the same tax rates collect less taxes because there's less to collect. Raising taxes has been done very carefully because the growth rate of the economy is not independent of the tax rate. If you try to squeeze the businesses, they would move out. And then the growth rate would slow down some more. And if the slow rate goes down some more, then your deficit will get larger. So the simple solution of raising taxes has to be much more considered, and it's easier to raise it on consumers than businesses because consumers are not running away, whereas businesses could run away. So the idea of that we can squeeze them and they will stay there to be squeezed is a very simplistic one. We do it at the risk of slowing down economic growth. That in turn would cause the deficit to widen. So on that note, thank you very much for coming, but let us thank our two paper writers for giving us an enlightening analysis. Thank you.
Just a quick announcement and reminder. If you need to check out our interactive webpage, the interactive sheet on GST, it is on our website, the penanginstitute.org/GST. And if you would like to read more about GST, actually we have a shorter version available outside in our Penang Monthly latest issue. You can purchase it from the counter outside of this hall. And basically, this is all. Thank you very much for coming. Thank you very much for staying true. And we hope to see you again in our next event. Thank you very much.
And please send in your subscription to the Penang Monthly before the 7% GST appears.
Yes.
Thank you.
Thank you.